Bitcoin, is the bloodbath over? First, Elon Musk drove sentiment in the crypto sector down over the weekend after Tesla announced that it would withdraw the Bitcoin payment option for the time being due to environmental concerns. The billionaire and CEO of the electric car maker had fueled speculation by making hints that Tesla would also sell its $1.5 billion investment in Bitcoin. Musk had denied this until Monday morning, but the damage had already been done. News from China sets panic selling in motion. Real panic in addition arose with a report concerning the regulation of the crypto markets in China. The Chinese central bank published a statement on Wednesday, May 19, that completely terrified many already insecure market participants. The bank made clear that cryptocurrencies should not be used because they are not real currencies. Financial and payment service providers are also not allowed to price products or services in digital currencies. According to experts, these are essentially not about regulatory changes. The statement is only a warm-up of information that has been known since 2017, and China has long been known for its critical stance towards crypto investments. The country is therefore working on a digital version of its local currency, the Yuan, and is already carrying out initial field tests. Of the major economies, China is considered to be the most advanced in developing a digital currency. However, the timing of these statements has been critical and, in combination with the Twitter tremor triggered by Musk, caused a market crash reminiscent of the Corona crash in March 2020. Bitcoin dropped to just under $30,000 in the low and is looking at a daily loss of almost 30% in the low. If you take the last record high of just under $65,000, the slump will cost the cryptocurrency more than 50%. However, the $30,000 mark has proven resistance for the time being, and Bitcoin was able to recover to the $35,000 mark by the afternoon. This means that at least the short to medium-term market sentiment is over. After Bitcoin was able to close above the 21 weekly moving average at the weekend, an indicator that has proven to be a very important support in past bull markets, the price had to dip below it at the beginning of the week. With today's crash, the 100-day trendline also had to give way. However, the long-term 200-day trendline has held as support. Not only Bitcoin, the oldest and best-known cryptocurrency, is suffering from the high level of uncertainty, but the entire crypto market. The currently around 9,900 digital values currently have a market value of $1.7 trillion. A week ago, a record of $2.5 trillion had been set. In other words, in just 1 week, values of around $800 billion have been burned. The second largest cryptocurrency, Ether, has come under even greater pressure. It had to drop around 25% to $2,430. Here, the record high, which was only reached a few days ago at around $4,350, is even more out of reach than with the number one Bitcoin. How should you deal with the crash? Today's sell-off has hurt market sentiment extremely. Many of the investors who have entered the market in the last few weeks and months and who were only used to rising prices have been taken by surprise with the double pack of bad news and driven out of the market. The price has fallen back to price stands where major institutional players have shopped, including Tesla, MicroStrategy and Square. The 30,000 mark at the latest should serve as considerable resistance. However, it is also clear that after this setback, the mood will be over for the time being and the momentum for a quick recovery will be difficult to regain. On the other hand, you can assume that big players will massively use the current low prices to buy more. The fall to the $30,000 mark was caught in a few minutes and buy orders drove the price back up to $35,000 very quickly. Michael Saylor, CEO of MicroStrategy, bought more Bitcoin worth $10 million after the fall to $42,000. If this crash reflects the carnage in March 2020, the recovery could be just as quick. Long-term investors still have to endure such volatile phases. Short-term traders should be satisfied with today's crash, as long as they have not already seen falling below the 21 weekly moving average as a sell signal. For newcomers who have been looking for an opportunity, now may be the chance they were waiting for.